In this video, there are multiple agendas we'll be thinking or studying on, starting with concept of supply analysis or producer's behavior, which means why do we need to study producer's behavior or supply analysis? Then different terminologies like total output, stock and supply. Let us try study them one by one. So the concept, or I would say background of producer's behavior or supply analysis is, we can understand this in a simple analogical way. Well, in economics, it's very essential to fix or determine the price of a commodity. Yes, in economics, it's very essential to fix the price of the commodity. But do you really know it's very commonsensical that price of a commodity is determined by market forces? Yes, market forces means demand forces and supply forces. Or I would say demand analysis and supply analysis. So, who poses demand? Yes, consumer demands goods. So, in order to understand demand forces or demand analysis, we need to study consumer behavior. Similarly, who does give supply? Yes, a seller, a supplier, or I would say a producer. Who supplies the goods? So, in order to understand supply analysis, we need to study producer's behavior. In case of demand, it's a relationship between the quantity demanded and the price, while in case of supply, it's a relationship between quantity supplied and price. So it's a similar way of looking at things. But yes, as it is very important to study demand to understand price, it is equally important to study supply or do supply analysis, or in simple terms, producer's behavior to study price of a commodity. So, as it is very important to study supply side of a commodity, let us study supply analysis or consumer behavior in a greater detail. In simple words, supply is the quantity of commodity a producer, a seller is ready to sell in a market at a price is called as supply. Let us understand this supply side or supply analysis in a greater detail. In order to understand supply side in a greater detail, we need to study its different terminologies first, starting with total output. So, before going to total output, let us try understand what is output. When you listen the word output, what comes to your mind? Yes, a simple process. There is an input, there is some process happening, and there is an output. Or in a larger perspective, there will be a firm, industry, there are things coming in and they are being processed and you see an output. So yes, producers with the help of factors of productions like land, labors, machineries, processes, right? They produce output. And that output is now available and then made available to consumer for consumption. So what do I understand? Output leads to consumption. Yes, simple. But I'll explain this. That what is an output is a producer uses the factors of production to turn inputs or raw material into the finished good or consumable goods, that is output. In simple terms, the output is produced of a commodity or goods or services through the production process. I'll give you an example. Let's say if I give some inputs of fruits or let's say mangoes, and do some process of production, I get mass out of it. So mass is an output. So, in nutshell summary, what is an output? Output is produced through the process of production. In simple term, with input of raw materials and factors of productions, we convert that, do some product process and make it output. Output is a basic step for consumption. It leads to consumption. So it goes into consumption. Once I know the concept of output, now it's very simple to enhance this concept and go to the actual concept of total output. As the name suggests, total output is total, or I would say sum of all the quantities produced of the commodity in the given period of time in the economy. Simple. It's sum of all the quantities produced of the commodity in the given period of time in the economy. I'll give you an example to explain this total output. Let's say in a factory of producing maza, we give input in the form of fruits and we get output. So this specific factory produces 10,000 bottles in a day. So that is its total output. If I want to see this total output in a state-wise, if there are such similar 100 factories and producing a total of, let's say, 100,000 of bottle, then that will be total output for the state. Similarly, I can go to the nation. So what is total output? Is sum of all the amount of quantities produced for the specific commodity in a given period of time in the economy. So, what do I understand is output is a process that raw material are converted into finished product using the factors of production or production processes. Naturally, those mazas are now available for consumption. So, the production leads to consumption. In production, we use factors of production to convert raw material into finished product. So, all those sum of all those productions lead to total output. So, total output would be a sum of or total of all the quantities of commodity produced during the given period of time in the economy. Once we know this total output, we need to understand two important concepts of supply analysis. Those are stock and supply. Here, we'll try to understand stock and supply simultaneously. And later on, I'll give you a couple of examples to explain the difference between total output, stock and supply. Let us understand stock and supply. Well, once the producer produces through the factors of production, convert those raw material into the finished product and they are ready to consumption, that quantity available with the seller for sale is basically a stock. So what happens? Stock doesn't mean supply. Stock is the available quantity. Through stock, supply has been taken out. What is supply in a nutshell? Supply is the quantity of a commodity a seller, a producer is ready to sell at a price in the market in a given period of time. Which means now the quantities which are available for actual selling are basically supply. At a given price during the given period of time, the quantity the seller is willing to sell is basically supply. So what is stock? It's available quantity for sell, and what is supply is actually a quantity which is ready for sell. So for me, stock leads to supply. So stock is a potential source for supply. Stock can be equal or greater than supply. Yes. What do? I need not have to, whatever I produce, I need not have to sell. However, in case of perishable goods, which has limitation for stocks like fish, milk, or vegetables, they have limitation for stocking. So what do? Whatever is being produced, whatever we have, we are ready to sell. So in case of perishable goods, stock is supply, both of them are seen. But for durable goods, what happens? When the prices are less, we tend to keep it and store it in larger quantities. And when the price increases, we start supplying it for selling. Hence, understand that for durable goods like, let's say grains, food grains items, the stock is greater than supply. For perishable goods, stock is equal to supply. So what do I understand? Stock is a static thing. Supply is a flow concept. Through stock, some part is taken out and sent into the market for selling. That is supply. According to P.A. Samuelson's, the supply refers to the relationship between market price and the amount of goods the producer is willing to supply. Such a beautifully defined. That supply is a relationship between the market price and the quantity supplied the producer is willing to supply. So when the price is 200 rupees, he would willing to supply only 2,000 units. When the price goes 300, he's willing to supply 4,000 units. So it's a relationship between the market price of the commodity and the producer's willingness to supply that commodity. In order to understand the stock and supply at a greater detail, stock is a potential source of supply. Without stock, supply is not possible. In fact, with increase in production, you can increase the stock. With decrease in production, you can decrease the stock. It's a potential source for supply. I'll explain this whole concept with few of the examples. Let us try understand that I am a producer of Maaza bottles. So with those raw materials like fruits, mangoes, I do some using the factors of production and the process, I make finished products, that is output, which is ready to consumption. So let's say I made 10,000 bottles, that is my total output. Out of which around 500 bottles came faulty. There were some issues with those bottles, some leakage, some things were wrong. So I resend it for the reprocess. So what do I understand? Now my production is total output though is 10,000. I'm in my stock. I have around 9,500 bottles, which whenever the market demands, I'm ready to supply. So at price of 20 rupees per bottle, I send 1,000 bottles in the market. As the summer season coming close, the price went from 20 to 24 rupees. I send around 3,000 bottles. So out of stock, the supply has been created at a given price where the producer is willing to supply in the market. I would give another example. Let's say I make 100 bread packets daily. So out of them, 10 are faulty. So with me, 90 are ready for sale. So out of total production of 100 packets, 90 are ready for sale. So that is my stock. So I kept 10 for myself, my family, my relatives. So now I'm only supplying those 80 products in the market. So supply is of 80, stock is of 90, production is of 100. Or I would say, I'll give you one more example. Let's say I have 5,000 kg of rice. So at 30 rupees per kg, I only send 2,000 kgs of rice in the market. So what do I have? I have 5,000 kg as a stock, out of which I just send 2,000 kg as a supply in the market. So now I have left with 3,000 kg as a stock. So once the price goes from 30 to 35, I am ready to sell another 1,000 kg at price of 35. So now that another 1,000 kg is a new supply. So in a nutshell summary, what do I understand? Its total output is a total production. It's a total sum of quantity produced in a given period of time in the economy. In case of output, it's a process of production through which we convert raw materials or input into output. and that production leads to consumption. Well, whatever is being produced comes as a stock to me. So, after production, it comes to a stock. So, stock is basically a potential source of supply. Without stock, supply is not possible. Stock can be greater than or equal to supply. Yes, stock for durable goods like wheat or pulses, when the prices are less, we keep in store a bulk quantity. And whenever the price rises, we send it to the market, we supply it to the market. Hence, for durable goods, stock is greater than the supply. For perishable goods, it's very difficult to stock them or store them for a longer period. So for examples like meat, milk or vegetables, the stock is equal to supply. Similarly, what happens in case of supply? Supply is a part of stock we are, the producer or the seller is willing to supply in the market at a price. So, stock is a static concept out of which we try to create a supply, and hence supply is a flow concept. Supply is the quantity a producer, a seller is ready to sell in the market at a given period of time at a price. According to P.S. Hamilton's, supply refers to the relationship between market price and the quantity, the amount of goods a producer is willing to supply.